Jason Schwarz, it's been a rough year for the asset managers. A lot of them are underperforming the S&P, the publicly traded ones that is. And a lot of that is because of the move towards passively managed funds. Money's moving out of active into passive. How problematic is this trend for the industry?
Well, I think it's problematic or it's healthy depending on your particular angle. And I think at the end of the day, money goes where it's best treated. And it's clearly been a difficult and challenging space for some active managers. But at the end of the day, active management still makes up majority of assets. We think that active management continues to have an important role to play. Certainly when we're talking about helping investors navigate potentially more challenging, more volatile, more difficult both equity and fixed income markets.
Well, you launched the Wilshire Income Opportunities Fund back in March. And this is an actively managed fixed income fund, and it's actually put in about $410 million in assets in the last 3 or 4 months. Very impressive. Why don't you tell me about this fund, then we'll talk a little bit more about it.
Sure. I mean, this is a good example of, in the fixed income space, we believe that a more active, more opportunistic, in this case, a multi-sector bond fund will be better positioned to navigate more challenging fixed income markets. We're at, from a historical basis, expectations for future yield, future total return. Clearly, future is likely not as bright as the recent past, and therefore we wanted to create a fund that would be a little bit more nimble and that would take advantage of more, frankly, exotic opportunities in the fixed income space, and to do so with two of what we think are the most skilled subadvisors managing fixed income assets today.
Well, let's talk about those two subadvisors, Scott Meinert over at Guggenheim and Jeff Gundlach over at DoubleLine. There are not that many star fund managers out there. Bill Miller is now gone from Legg Mason. I guess you can call Bill Gross over at Janus. He's running his own unconstrained bond fund over there. But talk about the attractiveness of having star fund managers in an era when there are not that many out there.
Sure. Well, certainly, we've learned due diligence is difficult. Researching skilled active managers is hard work. Wilshire spends a lot of time, a lot of resources doing so, and really separating skill from luck in any asset class, in particular fixed income. We think Scott Meinert and his team at Guggenheim, Jeffrey Gundlach and his team at DoubleLine are two of the most skilled managers, but they do really, frankly, complementary things. And so if you take, Guggenheim's got a really strong platform for investing in structured credit, CLOs, out of benchmark securities, certain, more exotic fixed income instruments. You look at Guggenheim, what they're able to do in the mortgage space, ABS, MBS, emerging market debt. And those are good examples of areas within fixed income where we feel are attractive, and those two subadvisors in particular are well suited to take advantage of that.
And I mentioned this trend towards unconstrained bond funds. Any worries that the lack of a benchmark is going to become troublesome at some point, not just for this fund, for the entire slew of unconstrained bond funds that have hit the market over the past few years? Because people are looking for yield and they're saying, all right, we don't need a benchmark, just find me a fund manager who's going to find it anywhere.
Sure. Well, so one of the things I think is different, certainly with respect to our fund, against some of the unconstrained bond funds, is for us, shorting duration or taking big bets on duration is not how we expect this fund to add value. It's bottom-up security selection, it's top-down macro views, within a really risk-controlled framework. So Wilshire, as the advisor, employing two subadvisors, we think from a governance framework, we're better able to manage the overall exposures of this fund. And clearly, we want to give each of these managers latitude to do what they do really well, but within certain preset constraints and parameters that we set, that we monitor, that we ensure that they're adhering to.
All right, you're going to keep Jeff Gundlach in check. Going to watch it. Thanks for coming on.
Appreciate it, Greg.
And thank you for watching The Street.